Good morning. We are talking about stocks, and I have a video when I talk about investing in a stock for the long term. Now we want to talk about how you can choose some stock for the short term. So if you like to trade stocks, I would suggest you open a Roth IRA with Charles Schwab. Their website is easy to navigate and to access a lot of information that you might need. And too recently, I believe their commission is $0. It used to be 9 point something when I started, and it became $4.95 this year 2019, but too recently they changed it to $0. But I have not traded anything too recently to confirm it, but I have received the email from them. And the reason I'm not trading anything at this moment is because we are trying to pay off our house, and we just focus on that. But if we save on our own allowances, we invest that, or when a stock has gone up, we will trade it, lock in that gain so that we can reinvest it. My husband has his account and I have mine. So it's good to trade in your Roth. That way you won't have a lot of form to use during your taxes and pay a lot of tax fee to your professional. So if you meet the Roth IRA requirements, which I would think you should, so it's good to trade first in your Roth IRA until you reach the maximum allowed, and then you can trade in your brokerage account. So let's talk about investing in stocks for the short time. Why short time? Short time. You know, there are some stocks that when you invest in them, they fluctuate so much that I don't think it's a good idea to keep them in your portfolio for a long period of time, because when the stock goes up and you don't sell it, that's a gain that you didn't realize. So that's unrealized gain. But when it goes down and you didn't sell it either, that's unrealized loss. So that's a loss you will see in red in your portfolio, in your account, but you have not realized it. So if it goes up, you don't realize the gain, then there's not much you can do about it, and you don't know if that will keep going up or not, depending on the story or the history behind that company. Is just better when you analyze the chart to just invest for the short term. When it goes up, sell that stock, lock in that gain, and then take that money, not to spend, but reinvest it in something else. So you should have a list of those stocks that you look at often when one is low, and you have invested in a stock that you gain something. You can just sell it, lock in that gain, and take the money and invest in something else. And if you like that stock that you just sold, then when it goes down again, you'll have the chance to purchase it again. You don't leave the stock market. You just don't sit around doing nothing, So what should you do first when you want to invest in for the short term? So there is multiple ways you can look for those companies, and it could be product that you use, it could be product people use, or product that even during recession people will continue to use. So you can list those companies and Google them. So when you want to invest for the short term, if they pay dividend, that's great, but it shouldn't be your priority for the short term ones. So you are going to research companies. You can, if you have a brokerage account with Charles Schwab or TD Ameritrade, I like those old firms. They have been around for a while, so I feel safe having my money with those accounts. There's something you need to keep in mind though when you are investing in the stock market is now FDIC insured, like your bank. So if you are investing in the stock market, there is a chance that you might lose your money. So choose the brokerage firm wisely. Just don't go with those new ones because they are promising zero commissions. So I prefer to go with the ones that have been around, the ones that have been around for a while. So TD Ameritrade, Charles Schwab, and if you like mutual fund, T. Rowe Price is a good one as well, but you can actually stock with them. You can, but I think it's more expensive. So the brokerage account like Charles Schwab is the one that I like better, and I'll put a link in the description as well. So have the list. You can go if you have an account with those, otherwise you have to use Google. So if you have a brokerage account, you can log in and research those companies. You can do research by industry or sector, and you will see those companies. You'll choose some that you like. So have a spreadsheet, the date you are doing the search, the company's name, the symbol, the price at that time, the 52 weeks low, the 52 weeks high. If they pay dividend, you have a column for dividend return percentage, and then list them down. Not all of them that you'll see, but the one that caught your eyes or the one that you like among them, you list them down. So you can look in oils, tankers, automobiles, technology, and those. So, and you list them all down. So now that you have a long list to work with, your next step will be to look at the one that are close to their low compared to their high. So when you look at the price range, just guess the middle and make sure they are on the far left, closer to their lowest price range than to the highest price range. So highlight those so that you can look at them better. And now your next step will be to choose the one that less than $20 a share. Like the current price is less than $20 a share. And when I see to compare their low and high, is comparing the price range, the price they are selling now, to their lowest price or their highest price. So you'll have 52 weeks of range price. At one point in the past, they have sold for the lowest price, and at one point they have sold for the highest price. So you want to compare the price they are selling now to those two extreme, and you want to highlight the one that are close to the lowest range. And your next step will be to choose the ones that are selling for $20 or less. So, and there is a way you can flip those. So you can first select the one that are selling for $20 and less. If that will narrow your search, your finds, and then you select the one that are closer to 52 weeks range. Or you can select the one that are closer to the 52 weeks range by looking at the middle. They already fall behind. You can highlight those, and then you look at it, and then you select the one that are less than, are selling now less than $20. You highlight those as well, and you choose the one that is the least expensive and closer to the lowest price range. Does that make sense? That's the one you'll invest in. Or the one that is the closest to the lowest price range, you can go with the one if it's selling for less than $20. Or if it has both advantage, that is the lowest price among them all, and is selling and is closest, is the one that is closer to its 52 weeks low as well. So you'll select one and you'll invest in that stock. So you'll purchase the stock, and you will, at that point, you can even set the selling. You can even put in an order to sell it once you purchase the stock. Because here's the thing: if you want to hold the stock for a short period of time, what we call a short period of time is within a year, even better within 3 months. So you want to go after those stocks that fluctuate quite a bit. So what you will do is, it depends on the amount you want to invest. First, you will ask yourself, how much do you need for that stock that you are choosing? How much do you need to invest in it, so that when it increase, because the goal is you want to make like $100 gain and just sell it, or $50 gain and just sell it. So you have to have a price that you want, your target price. If that's $50, you can choose $50 that if you make $50 gain, and when I say gain, that means after commission is taken out of it as well. So if it does not, the firm or the brokerage firm does not charge commission, even better. But after all those commission are out of it, you'll make $50 gain. So if you make $50 gain, you will sell it. So how many shares do you need to purchase, so that when it goes up, the stock goes up a little bit, you can reach that $50 quickly? So you can make those, you can analyze those decisions like that before you make any purchase. And for my husband and I, we like to go after $100. So if I have a gain of $100, I will sell it. And my husband followed that rule quite a bit more than I do. I'm more the one that like to hold on to the stuff for a longer period of time. But I noticed that when you sell it, you get out of it and buy something with your money, you lock in those gains. That allows your investment to grow. So that's that. So if you choose a stock that is not too expensive, you will be able to buy a large share of it. And when it goes up few cents, you will sell it. Even if it's not 50, even if it can go up in a day, few cents in a day, that you can make $20 profit after all the commission are taken out of it. Yeah, well, then you sell it, you lock in that gain, and you buy another one. Or if tomorrow it goes down again, you buy it again. You can even put in another order to buy it in a certain price, low. And when you buy, it goes up few cents again, you sell it, you make a profit. We don't day trade, but a lot of time we keep it for 3 months in average before we'll reach that $100 profits, and then we'll sell it and invest in something else. But that's how you invest for the short term. And when you buy stocks, I would suggest you have a spreadsheet to track those transactions, so that you have a record of those stocks that you purchase, because when you sell them, you may not remember them later. But by having them on your spreadsheet, you can find their symbol later and check on them again to see how well they are doing, if you should invest in it or not. So let me show you how we have been doing in my Roth IRA. I need to charge my computer here. And let's talk about this spreadsheet before we come back to while we are here. We can look, and as you can see, you'll see those bottom stocks here. Those are stocks that I will have purchased and resell as soon as I make few dollars on them. The one here, SXEE, it didn't have Q before when I purchased it, but it was not my first time purchasing it. I have purchased it before and made money on it, or my husband has purchased it before and made money on it, and we tried again, but now it went bankrupt pretty much. So if you cannot afford to lose that much money, you shouldn't be investing in some stock, and I will call this stock a penny stock. So they are the stocks that sell for less than $1 or around $1, but they are very risky. So if you have money, and you cannot afford to lose, you should be investing in penny stock. But keep in mind that sometimes you have to take a risk to gain something. And I have invested in them before and made money and tried again. But this time they were not doing well and they went bankrupt. So keep that in mind. I mean, they are still around, but yeah, I don't know if that will come back up. But the reason why I chose it is by being a penny stock, for example, it's easy for those stocks to go up few cents. Even that's a penny, for the amount that I invested in, it'll have gone up very quickly. Even if that's $20, I will have sold it and get out of it. So that's how you can invest in penny stock. You invest to buy enough share that if it goes up few cents, you'll be able to sell it and get your money out of it. Or you Google the company well to know if the company will be around a while. So you can see them here. I mean, they are still around, but they went down after I invested in them. And I believe they filed bankruptcy as well. That's why they have those QQ at their end. So WLL, I have purchased it multiple times, even for one of my kids as well. And my husband has purchased it like twice at least already and double his money on it. So, but this time after we purchased it, it was down, we purchased it, but then it went down again and it has been down ever since. But we will keep it around. A lot of time when you lose money on the stock, it's not when you want to sell it, because then that will be a realized loss. So if the company is around, it's okay to keep it, hoping that it'll go up. But keep in mind, you're investing in the stock market. There is a chance you lose your money, and there is a chance you'll gain as well. But you won't gain anything if you don't try. And since we are talking about investing for the short term, GE here will be one that will fall under that category. Let's look at GE, and the reason why I think GE is one company you should be investing in for the short term. When you look at this chart, it won't tell you much. You can see the 52 weeks range here. $6 and $11 is selling for $11. You should be buying GE now because it's close to the highest price. You should wait for that to go down before, and don't think it won't go down. If you click on the chart here, you'll see the chart, and that's the chart. When you research a company and it has charts like this, I don't think that's a company you want to keep as a staple in your portfolio. It's better when it goes up, you sell it and lock in that gain, and invest your money in something else that is low at that time. And then when it goes down again, you can go back and invest back in it again. So go in when it's low and get out when it's high. But if you keep your money in it and it goes down, and that's that time you need the money and you get it out, you'll have lost money. So for a stock that goes up and goes down, fluctuates like this, it's better you don't invest in it for the long term, but you trade it for the short term and get out of it. Another stock you can trade for the short term, it would be seasonal stocks as well. It could be travel companies, or even I think Walmart can be seasonal. There are time of the year when they are high and there are time they are low. So those are things you can buy when they are low and sell when they are high. And a lot of time it will be more 3 to 6 months, especially it will be about 6 months for those big companies. It will be 6 month time frame for you. So that means your money will be sitting there for that time frame. You can either choose those or choose some other companies that you can get in and get out very quickly within 3 months or maximum 6 months. And one way you will search those companies on your portfolio will be like at Charles Schwab, for example, you have this that say research, and we can look at stocks here. They say industry, so we can click on that. And as you can see, you'll have them listed here. A lot of time what I like to do is market perform, because I want to buy on their lowest price. So I'll look through here. I like to go through utilities, especially when I'm looking for staples to invest in. You know, staples will be in stocks that I'll keep around for a long period of time. But sometimes they can fluctuate. You can look at energy. Right now, clicking on energy here, that's where you can find oils as well. And oils, they can be seasonal. So in summertime they'll go up, and winter time they'll go down. So you can look at oil, gas, and consumable, for example. And chances are you'll find a lot of penny stocks in this sector. So we have oil, gas, storage, transportation. Why not? I'm sure if people are producing gas, they want some place to store it, right? So let's click on that. But that's how you can go back and forth and look at those companies included in each one of those sectors. And you can see them here, the symbol, the name, the price they are selling for, their market capitalization, or the value of their stock, you know, their company, the year to date. So that's their performance here, but it's not really what I'm after. Sometimes you have to click on it to find the information you need. And right now I can just quickly, let me close this. If I'm trying to see what stock I should record on my spreadsheet, I want to look at the price they are selling, and I want to look at the performance here. So now, as you can see, this one, for example, is selling for $9. Even Charles Schwab is rating it as A. But then it has 93% year-to-date return. You can see it, and for total the year is in green. So that's something I will want to put a symbol down quickly on a spreadsheet, on a paper, and I like that price is $9. And if that's something that is on the low side right now that I can invest in, if I have $1,000 to invest, I'll be able to buy more share. So if it goes up $1, I'll be able to sell it quickly and get out, something like that. So let's go down again. So you can see this one here, and there is something you need to keep in mind. Those LP, a lot of times they pay great, that they are partners, so they pay great returns, great dividends, high dividends. But then you'll get a form that you have to use to fill up your taxes, and a lot of times you'll get that form way past or close to April. So you have to wait. If you are investing in, not in a Roth, but in a brokerage account especially, you have to wait for those forms to come so that you can add it to your taxes. So they pay high dividend, but I have had few in the past, but I think they are more works than they are worth, in my opinion, because a lot of times they lose money. They pay you high dividends. I mean, you don't have to report a gain on your, when you file taxes, but because they'll have quite a bit of losses, deductions, things to report, but they are just more work than it is worth. So keep that in mind, that those LP is not really what you should be after, but they could be good ones. A lot of time they are just, they don't produce, I don't like their return. They'll have high dividends, but once again, the one that I have invested in it for quite a while, so it went through multiple phases. Maybe that's why I didn't care much for it. So let's go down again, and we have this one here. Chenier Energy INC, $61 is quite expensive for what we want. So that's how you look, but you can see that it has had some low and high, but we want to locate something that is not too expensive. So as you compare the way they are performing, they might be close to the high price range right now, but they are selling for a good price. So you can make a record of them so that you can go back and check on them to see if they are down for you to purchase or if they are still on their low. So when we have these things open, let's see, we still don't see what we are going to look for. So we have to click on the stock, but very quickly I just want to scan this long list to see what stock I should note down. So I'm looking for anything that is lower than $20, and you see this DHT Holdings INC. Even Charles Schwab is rating a B, so that's good, and it has been growing throughout. For return year to date is 105%. That's good, 105%. So, but it's selling for $8. Those are things you want to quickly take a note of, and then let's click on it to see what we can find out. So now that we click on it, you can see that the price range was $3 CC, and the highest was $8.47 on the far right here, and now it's selling for $8.07. So it's a great company, at least that's a good stock, but I don't think for what you want to do is the right time to purchase it. But if you look at the chart here, you will see that it keeps going up. So one thing you can do as well, if you have a lot of money on hand, I'm just putting on my calculators here. If you have a lot of money, you can invest in it. If it goes up 5 cents, you can sell it. So let's see. I just have my calculators up here to see if you have $1,000 to invest. So $1,000 divided by 0.8.07, you will buy 123 shares of it with $1,000. So if it sells, there is a bid here. It's not giving me information how much the range that it traded yesterday, but the stock is not open at this time. Otherwise you will see the range. But let's say that it traded, you have like, it can go up 20 cents in a day. So if you have one, or within a week it can go up 50 cents. So if you have 123 share times 8.50, you'll have the value will be 1,053. So that means if it goes up 50 cents, you'll have $53 gain. So that's just as an example, assuming that the Charles Schwab is not charging commission right now. Well, you can buy it now, even though it's on the high side, but the chart is telling us that it's going up. So that means you want to buy and put a sell order for $8.50 or higher. So when it sells, you'll have $53 gain. And we assume that it can easily go up to $8.50 within few days. So you want to put in a sell order right away when you purchase it, once you purchase it, so that if it reach $8.50, whether you are checking the account or not, just what will sell it for you, and you will make a gain of $50. That's how you invest on those stocks. And you can do that at any moment of the price range if you just want to be in it for a few cents raise of the share and just sell it. But if you don't have a lot of money to buy 123 share, then you want to take a note of this stock but not purchase it now, but wait until it's closer to 3cc, or the middle between those two to be closer to 3cc, then you invest in it. So that's how you will choose your stock for the short term. And this stock is paying you dividend as well, 2.53% annual dividend. So that means while your money is sitting there, you will be able to make some money on it as well. And if we look at the chart here, we can see it has been way up before, $200, and now it's way down. So for somebody that would have purchased it for $200 and wanted to keep it in his portfolio, well, he would have unrealized loss if he didn't sell it by now. So that's how those stocks, you can just trade them within short period of time. You invest a lot in it so that when it goes up just few cents, you can make few dollars profit, $20 profit, and you just get out of it right away. That's how you can trade for the short period of time, and it doesn't have to be trading every day, but your time frame should be 3 months to 6 months maximum. But if you can do it within few weeks, that's even better. But now that we look at a few examples, let's look at the spreadsheet here. This is where you'll track those stocks so that you know their price, their high and low, so that you can go back and check on some of them to see how the price went down, to see if you can invest in them or not. And as you do that, when you purchase a stock, it's good to record them here. So you record what you purchase and you leave a space so that unless you are using a spreadsheet, you can insert another row. When you sell it, you put a row below where you purchase, you put the purchase record, and then you track it together. That way you calculate your profit. And as you can see, Tyson, I purchased it February 2017, and I sold it in November 2017. And I purchased 13 share. It grew into 13.14 because of the dividend. And when I sold it, even though I paid $6.96 for commission when I purchased it and $4.95 when I sold it, I made $185.55 on how much I purchased it for $8.52, and I made a profit of $185. So if I want to calculate a return on that, that would be this amount divided by the amount that I spent on it. So that's 21% is negative because I have my purchase price in negative. So I can put that there. So that's 21.77% return right there within in less than a year. So as you can see, I track how much I invested, I deposit in my account, and how much I sell those stocks as well. Oh, I'd like to show you the profits. I was never even looking at that. So this one, for example, I made a profit of $13 and I just got out of it. And that's Procter & Gamble. But you can see that I had it for a year. And for a year, and I only made $13 on it. So you have to look at the company to see if it's worth keeping around for long term or just buy it and sell it quickly. Because if it has been there for that long and I just make that amount, it may not be a good idea, but it could be a good company to have for a long period of time. So I have this one here, and I sold it and I made $10, and that's after taking the commission into consideration and all that. So buy sell, and it has been there for 2 years. So those are not really the one you want to go after. It took too long to go up enough for me to make enough money on it, and the reason could be because I didn't have a lot of share either. So when you don't have a lot of share and the stock is expensive, it takes time for you to make a good amount of return on it, especially if it didn't go up high. So that's something to keep in mind, the amount you want to invest and the price of the stock. So if you look here, I think I have traded Procter and Gamble here as well, and I sold it here. First, let's go back up a little bit here. So I'm not doing it right here. You can see that I purchased it. Okay, so anyway, you can see those 3 rows here. I purchased it in 2015 and I sold it in 2016. A little bit less than a year, but it has been quite a bit of months as well. And I made $28 on it. So when they sold for $82, I purchased it for $68. So when it's that expensive and you don't have a lot of money to invest in it, and I only bought 3 shares, it will take a while for that to go up for me to make a good amount of return to sell it. So that's the reason why I had to keep it in the portfolio for a while, so that it goes up well enough for me to make a good amount on it. And I have this one here as well that I purchased, that I have for 2 years. Yeah, 2 years, and I only have $7.79 profit on it as well. So it was not a good one to invest in as well. Chances are I invest in it and then it went down, so I just left it there. That's that thing. When things goes down in my portfolio, I don't sell them, I just let them come back up. So it took about 2 years for this to go back up for me to make some money, and as soon as I made a few dollars, I sold it to get out of it. Otherwise I could have sold it long way before that and lose my money. And as we go down here, so this one will be $1 for another category as well. I purchased it and it went down, and I just held on to it until it went back up for me to sell it, and I held on to it for a year. And this one is an example of when you will the company will file bankruptcy. So when they file bankruptcy and pretty much they disappear, then I'll record the loss of the amount that I pay for it. So that's this negative here. Otherwise I don't sell my stock at a loss, I just leave them there. And this one, that's the one that I have now there, that is losing quite a bit of money in my account. But I have purchased it before in 2016 and sold it within a few months, and I made 120 on it. So I bought 100 shares and for $62. That's an example of penny stock, and I sold it for $2 within a few months, even though after paying $8.95 twice for commission, I made $120 on it. But now 2 years later, 3 years later, when I invested in it, it went bankrupt. It's still in the account, but is not making any money right now. Let me see if I can locate it. And as you can see here is this one here, the third one before the last, the if you go from the bottom, that's the third one going up. SXEEQ, EQ, because it's filing bankruptcy. So you can see that there is 675 loss here, but I have made money on it before, and that's pretty much it. You can see that the amount that I invested in it before was $70 and I make $120, so it was way more than what $120 was, way more than what I invested in it. So it was, you can see the difference there. So that's how you invest in the short term, and you track all of those profits. And you can see that in my deposit here, I have deposited $2,344 in my account, and I have made a return of $913 on it from 2014 to 2019. So that's how you track your purchases and sales throughout the year. And while I have some losses as well, I will say that, I have made some gain, some profit throughout the year, and I have traded, I have recorded those things by, the latest one was April 2019, so I have not updated too recently, and it could be because I have now made more purchases too recently. So as you can see, track your purchases and your sales of your stocks so that you can go back and evaluate it and see if you are making a good decision or not. And over time, you will see a pattern that you like and you'll stick to it. That will be the plan that will work for you. I'm just showing you what works for me and my husband, and once you start investing on those stocks, you'll see what works for you. And as you can see, GBLU is one that I have invested in the past, and I put quite a bit of money in it, $439, and I purchased 24 shares, and when it went up a little bit, $22.25, I made enough to sell it $86, and I got out of it. And there's one here, BLOX as well. And I know that my husband does similar things. If we go and look at what he's doing here, you will see more of, let's see if I can freeze the top here. So as you can see, you'll see the column for profit, and that's this column here. Let's make that a color that let it stand out for us. And he's very good at buying and selling. You can see right here that WLL, he purchased it 2018 December and sold it in March and made $198 on it. So he's spending quite a bit of money on it as well, $583, and he sold it for $781 and made that profit. And he has ALGT as well, Allegiance. So he purchased it. I didn't record the date he purchased it, and he sold it in 2018. But chances are he did it in 2018. So he bought it in 2018 and he sold it, and he made $207 in it as well. So if he has sold it in 2019, it still have been less than a year. And he bought WLL before too. in 2017 and sold it in 2018, August 17 to April 18, and he made $67 on that. Verizon, he purchased it. You can see that you track it. When you purchase it, you put it down, but even if you sold it years later, you put it right below it so that you can track it together. He purchased Verizon in July 17 and sold it December 18. After a year, and made 107 cc. And you can see the price that he purchased it. It was quite high, $43. So those, when the price is high, you have to invest a lot more to make a difference in the game. But you can see Allegiance is quite high as well, but he likes it. He likes to purchase it, and when it goes up, that's something that fluctuates. So there is a time it goes down and there is a time it goes up. So that's something he likes to invest in. As for WLL 22 to 30 is the price range right there. So when the price of the share is high, chances are you have to invest a lot in it so that your gain can be substantial for you to sell it. Otherwise, you have to wait longer. And this one is one that filed bankruptcy on him and he lost his money. So that's a possibility. But chances are you'll be making money in some other stocks to the point that your overall will be a profit, not a loss. So he lost pretty much everything here and about 351 because there was one here as well. So he purchased it twice and he lost that money when he filed bankruptcy. But you can see right here that he made another profit here on PETS. He purchased it March 16 and sold it August 17 and made $268 on it. As you can see, for the profit he made so far, he already overcome this loss here. And if we go down again, we can see Allegiant here that he purchased in 2016 July and sold it in December 2016 and made a profit of 212.53. And as a total, well, I have my total here in negative number, and I don't know why, because we only saw the loss, right? 351 was one loss. There is another one here. Did I see one? No, 351 is a loss. Oh, okay. So this one here, well, it's not a loss, but because I have a calculation, a formula here is doing it for me because we have not sold it yet. I don't know if you see it. We have a row here. When he sells it, he can fill it up right away. So because we have not filled up, he has not sold it yet, he's doing the calculation. That's why we have it. But when we don't sell anything, we don't, yeah. So when is WLL is low right now, but you can see how much he invested in it this time. He purchased it he spent $2,000 on it, and you have seen it before. Here he made a profit on 198, and I believe he made a profit down in the past as well. So he believes in it and he purchased it for $22, but it has gone down since he purchased it in May. So he has not sold it yet. So when the price is down, we don't sell those stocks. We just wait for them to go back up. And let's go back again and check how much profit, realized profit and realized loss that he made versus the deposit, which is the column right next to the profit column. So you will see that he invested $2,853 and he made a gain of $702 on it. So that, and he even got about $51 in dividend in some other things. So that's how you track those. You can see that even though he lost money on that stock that bankrupt on him, he made profits on the others. But if he has kept those stocks that he made profits on in this in his account, in his portfolio for that time frame, he wouldn't have realized those gains. So that's how his even though he only invested 2,800, by just selling and reinvesting that money, his account has been growing. And that's the same way, that's the same principle I use as well. So you track those gains, those investments. Don't take money out of your account. You can see that I invested out of my own pocket $2,344, and I have a realized gain of $913 on those stocks that I have sold. And I believe few bankrupt on me as well. Like this one, for example, $43 loss. And that's pretty much it. And sometimes I like to track the profits, the overall profits, and you can see that you'll have the accounts here, you'll have the money that you invested, but you have to update those. Mine may not be up to date, but I have been tracking it. This one is 2019, so I have 2018 down as well. So but I had to see if anyone invested